Good day, everyone. Ali is here from Safi Financial Network. Today is November the 5th, 2022, with a gold chart analysis. And and I know that lots of you are asking about if gold is getting to the next bull market or this is just a triple bottom and we are heading to a nice parabolic move to the upside, probably 1900, 2000. Some people are saying, some traders are saying about 1700, 1800 levels. So we are going to talk about these levels in today's analysis. But before getting to the chart of gold, I just want to tell you about what elements are going to impact on the gold chart, and probably we need to take care of that, and we need to have a look on those charts as well, despite of the gold chart itself. One of the most important chart that every gold traders need to pay attention is GDX, which is a gold miners chart. Okay, before giving you analysis about the gold chart itself, let me just open up the GDX, which is a gold miner ETF. Okay, so here is the GDX monthly chart, and as you see here, this is Vanguard Vector Gold Miners, which is pretty famous and important chart for the gold miners. As you see here, we are getting to bottom of this wide range bar in monthly chart initiated April 2020, and we are getting kind of like a bottoming formation. So with three higher lows and monthly higher lows, and these long shadows on the bottom, that kind of like giving a trader signal that probably this wedge, it was just a bear trap, and we are getting to the bullish momentum. So that's I believe this is very, very good level for investors. Don't get me wrong, but for trading, we should pay attention to the shorter time frame as well. Let's go to the weekly chart. Okay, so here's the weekly chart. Pretty nice formation, huh? Pretty nice formation to the upside, and it's kind of leading indicator. If you want to pay attention to the gold miners, they are kind of like leaders prior to the gold chart. When we have like a gold chart is coming down, we should pay attention to the gold miners because these ones are taking benefit of selling gold to the free market, right? So they're just producing golds and they're selling. So they need to take a benefit and they need to make profit out of it. Otherwise, they're gonna losing money, right? So when we have gold miners are heading up, this signals us probably we are getting the better gold price just because gold miners are our leading indicator. And right now in weekly chart, we are getting to this level, to this wide range bar. This is a COVID crash, by the way, and then sharply backing up to the upside weekly chart. So these wide range bars are kind of like an institution. Remember, 2 years ago, institutions just buy back here and just push the price all the way up to here suddenly with more than 50% just a month or so. So pay attention to this. And typically, gold miners are kind of a leading indicator, not just for gold, for stock market as well, because they bottom earlier than I believe, yes, earlier, a week earlier than the stock market itself, and they topped just a week before or at the same time of the stock market. So it's kind of like a leading indicator, as I said. When I see this bottoming formation is coming up, probably we are getting okay. So probably stock market is bottom as well, and we will have like a rally. But this rally would be short-term rally, or that's going to be bottom for the stock market. I would say this is a short-term rally. Just because we break down this important resistance area. So you see, this is a resistance area. And when we are getting back to the flip side to the chart, so this is going to be support area. And whenever we are heading down to this level, this wide range bar, because this one is breaking out to the upside and kind of engulfing this red bar, so that's the institutional level. When we are getting to there, so triple bottom, nice rally to the upside. But look at that, this wide range bar kills everything. So this means, okay, institutions are coming back and they're selling there. So this is the left order orders for here, but they are selling all here. So as you see, when market is coming down, like a GDX is coming down, there is no enough support here. And then after just a small bounce, it just breaks through all the way down there. So there are lots of sellers here. Still, this level is going to be very, very technically good level for sell. And also look at these trend lines. So these two dynamic trend lines are ahead for the price. Also, 26, I believe 27, that would be the nice resistance level as well. So there are lots of resistance there. I know this pattern is kind of giving us a bullish momentum, but if you go to, okay, just before going to the daily, stochastic wise, we are getting to the overbought condition. So when we are getting to the overbought condition within the bear trend, so what do you think? That's going to be selling opportunity, right? So that's going to be great selling opportunity because in bearish momentum, you will get lots of oversold condition. But when you're getting overbought condition and reversal in overbought condition like this, and like this, that's gonna be good selling opportunity because we are in downtrend. We are not into uptrend, right? So the next week or so, or I would say next 2 weeks, we should get to this level, probably price wise. And then a stochastic is giving us another sell signal. Look at the RSI. So RSI is not above 50%. It's below 50%, which means momentum is dead. Momentum is pretty dead and gone. So we need to get better momentum, at least something like this when we are getting above 50% and stay above it. So this is going to be a sharp rally. Otherwise, below 50%, when we are getting overbought condition, this means this is just a relief rally or dead cat bounce or bear market rally. So whatever you want to call it, but that's going to be selling opportunity, right? So probably we are at a good tradable level for limited upside targets, but that would be a selling opportunity again, as I said. Or if you have long position, make sure that just put your stop loss at the free, make sure that make it risk free and trail your stop because you don't want to change green to red. So going to daily chart is pretty interesting. I just clean up moving averages to see the price action better. So daily chart is kind of like a forming kind of reverse head and shoulder. But this reverse head and shoulder didn't react pretty well just because there are tons of resistance here. And this white range bar is showing up a resistance. So on Friday, we had a very, very nice gap top and buying pressure just going all the way up to here, kind of engulfing this red bar. So I would say on Monday, probably we will get more um, upside momentums. At least we can see a gapped up above 24 level. But look at that. So above this area, which is above this $26, that would be a liquidity pool. So basically what I mean by liquidity pool is lots of people are putting their stop losses there. So exactly 2681 to 2815, that would be lots of stop losses there. So I believe for those ones who are sellers here, they should be careful because market can gap top here and activate all those stop losses. And those stop losses change the orders from the sellers to the buyers. And we should see more upside pressure probably to the upside. And then all the stop losses hunted here. So I would say this area. Then we should see another reversing back down to the bearish momentum. Why? Because look at this level. So this is the triple bottom, the one that I show you for this fantastic rally. But this area, which is 28.9, let's say $29, that would be the last trench or the last target upside target for the bulls. That's going to be the last trench for the bulls because I believe from 26 to 29, there are lots of stop losses here, and when this is a fantastic level for big monies, for big boys to stop hunt here and then coming back down. So just be careful, folks. This is a typical price action for stop hunting, especially for the bulls and bears. So if you are long, I would rather, if I were in your toes, I would rather to take profit out of it here in this area, and don't go short, because even shorting the market is going to be tough here, because probably you will get another gapped up here and then coming back down. So institutions are going to do whatever they want to impose the maximum pain to the retail traders, especially if you're not pro. But I just want to give you another tip. So if you just break it down right there, so anything above this, that's going to initiate a rally all the way up to here. So I would expect on Monday and Tuesday, or probably Wednesday, gold miners are getting there. And what happened to the gold price? So 10 minutes we were talking about the gold miners. What happened to the gold price? And let's go to the another chart. I just want to show you another chart. So this is a chart in TradingView. I just put this one in another format. So this is GDX to GLD, which is gold miners compared to gold ETF. And you see, this is kind of like a very, very similar format. Um, and as I said, gold miners are kind of a leading indicator. So based on this chart, we can see lots of liquidity pools here. And, uh, and this area would be achievable, I believe, in Tuesday and Wednesday. But when I'm looking at this resistance area, which I show you here, 0.17, 0.18, so this is exactly the level that I'm looking for a reversal. So to sum up, I would say gold miners are pretty ready for an upside move for Tuesday, Monday, and probably Wednesday. And after reaching to 26 to $29, that would be the final target for the gold miners. And after that, it's interesting because on Thursday, November 10th, we have CPI numbers are coming. And you know CPI, when CPI is hot, this gives green light to the Fed that, okay, push on the interest rate just because still inflation is there and you have green light to go more hawkish on the interest rate. So technically and fundamentally, is telling me that gold miners are ready for next 2-3 days upside, and probably on Wednesday a doji bar, and then reversing back on Thursday, and then after that getting back to the bearish momentum. Okay, what's happening to the gold chart? So here is the weekly chart for the gold, and as you see here, we are getting back to this wide range bar. Great, 1641 is great level. So triple times, even 4 times, we are getting below this, but couldn't close below this, and then reversing back up. Seems like institution is coming back because this is a nice demand area. Sorry. So this is a nice demand area. I would say this is a fake demand area. But because this is weekly chart with this long shadow, there are lots of institutions are coming back here, and this is pretty nice reaction, and this is technical reaction. But how far we can get above this level? So last week, amazing. These triple shadows here, amazing, a signal for the reversal. But are we going to have a parabolic move to the upside? I pretty doubtful about it. And the reason is just because before this, I talked about the gold miners. And gold miners, as you saw, we are expecting for higher prices in gold miners for the next 2-3 days. But that would be it. So when we can just expect prices coming back down from the gold, gold has like a substantial move to the upside, like 3% on Friday. And this is typically not happening to the gold chart, 3%. But let's say here is the level. So this is the level for gold that I'm expecting, which is 1736. in daily chart, and I'm not sure even if we get close above this. Probably we are just piercing through, and let me just put it there. Yeah, so probably 1734, 1735, let's say this level. Let's put it there and just change it to the orange as I show you all the time in my chart. This is the area for reversal. Probably we are getting more upside, and that's going to be huge, to be honest, move for the gold, but that's going to be it for the price. Also, if you look at this is a nice rally within the downtrend. So probably this bottoming formation is giving us another signal, something like this. And we are getting to the upside, not this one, but this triple bottom actually can show like a rally, something like this, coming back down, rally, coming back down. So we are still in a choppy formation for gold. And I believe 1374 to 1384 on weekly, which is huge a move for the gold. It's going to be $100 move. I'm not sure even if we get there, but I'm saying even if we get there, it doesn't mean that trend has been changed. And if you look at this, so still 1700 would be the very decisive price for the gold. 1700 based on the weekly. So probably next week, next 2-3 weeks, we will get to the 1700, even shadow above it, but that's going to be shadow. And look at the weekly close. If we close below above this, so probably we are heading to this area. But if we get a shadow and then coming back down below this, so that's going to be the end of the bear market rally. And we are getting back down to this level. So I'm still looking for gold is coming back down to this level, which is 1540 to 1557. All right. So this is a weekly chart. And if you go to the daily chart, again, we can see in details. So again, marvelous move to the upside, fantastic. You rarely see something like this in gold price when we have a good momentum, something like that, especially in the bear market, something like this. Uh, Bear market rally always is going to be tricky. And if you look at this, so this is the short-term trend line, which I believe this one is going to be broken. But how about this one? So again, as I show you here, how about this one? So we should pay attention to this one, not that one, just because people are watching at this one, and probably this one is breaking out and say, hey, the trend line has been broken, so let's see if it can go above it. But 1700 is I believe is the correct trend line for the gold. And if you look at indicators actually are kind of like showing the bullish momentum is intact. Stochastic, nice reversal from the oversold condition and then coming back up. RSI is above 50 now. So when RSI is above 50, um, that's the bullish momentum, but we need to stay above it. We shouldn't see actually this one is coming back down because that's going to be end of the story. And I'll see you on the chart. Bye bye.